All right. Thank you, Daryl. As usual, the soothingest voice on the planet. So it always puts me in a calm state of mind when we get ready to dive in here and talk about all the craziness that's going on in this market. So good evening, everybody. Yeah, this should be fun. So I'm watching after hours too to kind of seeing if there's anything happening. I don't see too much, but I do live trade sometimes during these webinars if there's something setting up. So we'll see if you guys see anything interesting. And then yeah, the Orcs wrestler. Wow. Yeah, that was an experience. So what we're going to talk about here is as you guys may have noticed, this has been a pretty crazy and volatile year. And I don't want to sit here and recap all that's happened this year. This is a forward focused moment in time where we just want to put a stake in the ground and say, all right, this is what to expect. This is what to look for. This is how to take advantage of this market. I don't think we're going to see a market like this again, at least within the next two decades. So you've got to understand what's going on and be able to kind of milk the cows, so to speak. I just don't want you to look back in 5 years and say, man, I really wish I understood what was going on and I should have really dove into that. And so I wanted to just kind of talk about what's happening here, the dangers to look for, and just kind of how to dive in. And yeah, so for Tesla, of course, I'm going to talk a lot about Tesla. This is what I did for earnings. And I go, if you're newer, this is just a little different thing. On principle, I had to sell the $3,500 calls naked. And on principle, I also had to sell the 3,200 calls, the 3,300 calls, because I've never seen 7, 8, and 9 and 10 standard deviation calls going for that much. But anyway, it'll be interesting to see where it ends up. Right now, the expected move was $184, and it's only up like 60. So all those options will implode, and so that will be good for us. So again, just kind of an example of understanding the current market and playing it correctly. Okay, so let's dive in. So we got crazy markets. I love this. It just says when it's career day and your dad starts talking about the Robinhood account he opened in March. So a lot of new traders have been having a tough time. First of all, of course, if they were buying the dip in March, they were getting destroyed. And then if they were deciding to short every rally in May, they were also getting destroyed. Okay. And so the idea here is to go with the flow. When the market is crashing, you want to go with that. But when the market is rallying, don't fight it. Newer traders are having a tough time understanding that because they're trying to make sense of this market. They're trying to think of it logically. This is not a logical market. This is an emotion-based market, and you've got to understand that. But the good news is that we can chart emotions and we can trade off of those. Okay. So the issue here is that if you don't have these tools, if you're newer to the markets and you don't have tools that give you accurate buy and sell signals, what happens is a situation like this, because your brain, and not just your brain, it's every human's brain, okay? Every human's brain operates the same way when it becomes a risky environment. Okay, that's when our reptilian brain kicks in and causes us to run, causes us to flee. Okay, so because of that, if we're not aware of it, this happens. So what'll happen here is something like this. Now, of course, what's ironic here is sometimes it does in this environment keep going, but about the time when it feels like, wow, my dopamine's kicking in, I've seen this huge move, I think I'm going to buy it here because it feels safe. Right. And this works on the downside too. And there's euphoria as you start making money. It's like, oh my God, this is so easy. And then it comes off a little bit. There's a little anxiety. And then it goes below your entry and there's denial. All right. And then it comes down to your stop and you cancel that stop. And then there's fear. And then all of a sudden it's like, oh my God, that can turn into depression and panic and capitulation. So the whole point of this is that we are looking for capitulation. Okay. Our entries are oftentimes OPC, other people's capitulation. Okay, that's just how this works. So we want to look for those opportunities. So what are we going to cover tonight? First of all, what's going on? Okay, what's happening is rare. The last time I saw markets like this was 1999. Okay, when that happened, I did not know what the hell I was doing. I was making money, but I was like, wow, this is amazing. Now that I've lived through that kind of a market and I understand that kind of a market, I can trade it much, much more effectively. Okay, I'm not fighting it. It's not like, oh my gosh, things are too high, we can't be doing this. No, no, no. It's recognizing what's happening and pouncing on it. Okay. So to give you an idea of this is that the last and only time I ever made $1 million day trade was on January 14th, 2014. And it was because I was really dialed into Tesla. And at the time, Tesla was trading at $130 a share. But as it came about, there was a tweet. I knew that there was like 40% short interest. We took out some levels and I loaded up and I bought something like 800 calls at $6. And, it went up to like $25 and I scaled out and it was amazing. I mean, it was a huge position. It was a lot of stress. I didn't sleep that night because I kept some of it overnight. I was like, wow, that was amazing. So that was an individual stock, not an entire market. But now we've got an entire market that's doing stuff like this. Okay. And just, that was a long time ago. And now in June of this year, I had another $1 million Tesla trade. And then in July, I had yet another $1 million Tesla trade. Okay. Now it's not just Tesla. We've also had big trades in Amazon, other stocks like that. But the point is that the market is in a situation to allow this to happen. And it's being able to identify this and pounce on it. Okay. I don't know how much longer this is going to last, but you want to be able to milk these moves while they're here. Okay. Because at some point it will stop. When the music stops, you don't want to be the one not sitting in a chair. So you got to know how to recognize what's going on in this kind of market in order to take advantage of it. Okay. Yeah, it got some shares too. It's crazy. So what to expect the rest of the year? Where is the danger? Is it the election that's coming up or is it the economy? Because there's a lot of bad, nasty news. And based on the news, things should be going down. I think every commentator that comes on CNBC is like, oh yeah, you got to short this. Ouch. And don't get me wrong, I love shorting stuff, but I use a thing called a signal, and we're not getting any sell signals, at least in the stocks that I'm trading. What about gold and silver? Okay, and then where are the opportunities here, frankly, to make the most money that we can while we can? So a little bit about me, because I know there's a lot of people here who are brand new that don't know simpler trading, that don't know me, and that's fine. So I'm going to do the 30-second, who am I? Who am I? That was from, that's Jean Valjean in Les Mis, if you guys are familiar with that. Okay, don't know where that came from. So I have a book out called Mastering the Trade. I first wrote it in 2005. So I have been doing this for a while. And when I wrote that, I'd been trading at that point about 10 years, actually more than that. So that's on Amazon. You can get it on Amazon it's a lot of good stuff like on psychology and stuff like that too, and some of the setups. Is it your favorite musical? Yeah, I like it. I've really gotten into Hamilton and Hadestown, and I'm so bummed that Broadway is closed, but I definitely want to go see those again. For me, trading is life. So part of my trading is I'm going to talk about, I do like to wire out profits for tangible items and experiences. So for experiences, I'll take my family like to Africa. We went to, this is Richard Branson. That's his reserve in Africa. That's my son and I, and our whole family was there. Got to interview Lance Armstrong, which is kind of cool. We went, here we are in Africa. I'm explaining what I do to this kid. And this is my son, Dylan, going, my God, Dad, I've heard this 100 times. Wrap it up. That's my daughter, Avery. And then I like to trade with my dogs. That's my setup. So in March of this year, on March 18th, I started the year with an account size. So I trade a couple different accounts. My main trading room account started off at $1.25 million. And as of March 18th, we had crossed over $2 million, and I do wire money out. So we were at $1.7 million in profits. And I'll show you where it is now. But the main point I want to show you here is a structure of trading to track profits. And I think this is part of the reason I'm able to grow accounts quickly and not freak out about it. But this is my process. So this shows a typical week of trading for me in March. So as you'll notice here, and this is my trading journal. This is what I do. So I have my beginning balance at the start of the day and then my ending balance, the difference in the percent change and any notes. So basically I was flat coming into Monday. I did a small NQ trade. That's it. I made $2,600. On Tuesday, there's my starting balance. There's my ending balance. I made 6 figures. Awesome. What happened? I had positive gains in the S&Ps, the NASDAQ, and work, which is Slack. Okay, Wednesday started off at 287. Ooh, a little nasty. I lost 60 grand. And remember, it's just percentages. Don't get too caught up in the numbers. Just use the percentages. Man, last day of the Squeeze Pro class, I was tired, and I let some trades get away from me. Thursday, made $126,000. Solid day. Could have been much better, but I traded yada, yada, yada. And then on Friday, I gave some back. Blah day. I was looking for strength, and we gapped down. Crap. All right, but what happened? I made $60,917 for the week, and I made 3.08%. So what is my goal every week? My goal every week is to be able to make at least 2.5%, and I wire it out. So I wired out my 2.5%, and then I left the $7,000 in to continue to accumulate. So that's my trading plan. That's how I see the markets. I don't look at it as, sometimes people say, well, why are you getting out of everything? Because I got to blow everything out here, because I got to keep my 2.5%. I got to wire that sucker out. And so a lot of times my stop losses are based on that too. And so it keeps the losses small. It keeps me focused. It's like a job. Okay. I need to have something. Otherwise it just becomes like a video game. So that's how I do that. And I tell you what, everybody I know that's done it, and don't worry about the numbers. Again, it's the percent. If you got a $10,000 account, 2.5% is $250. Okay. That's real money. And when you see that hit your account, your psychology changes. Your psychology completely shifts. It's pretty amazing. So that's how I do it. So now here we are in July. This is, for me, for anybody, this is a big trading account now. So now it's over $5 million, almost $5 million in profits, because I keep wiring money out. And this was the day I had $1 million Tesla. This was a good day. I had $1 million Tesla trade. I had a $200,000 Netflix trade. All these trades were called out in the room. Shack, that was when I was short Shack and it was actually working. And I was down on Amazon and NASDAQ. All right. So fun stuff. So here's the deal with trading. This is what I've learned doing this for a long time. Making money is not that hard. I know sometimes it seems hard, but it's actually not that hard. It's the easy part. The hard part is keeping it. Okay. How many times have you guys made money? Like, oh my God, this is great. And then you give it all back. Okay. You make money and give it all back. That's the pattern I got into. I'd have $50,000, and every time I got to 75K, I would bring it back to 50K. I think it's psychological. I never really figured it out. But what I did know is that during this time, what I could do is I was really good. So here, as a trader, you've got to find out what you're good at. I was really good at this time of taking 50K and turning it into 75K. After that, I was crap. So what I did is I hacked it. When it got to 75K, I would just wire out 25K, because I knew that I was good at turning 50K into 75K. So a lot of trading, you got to find the psychological points that work for you. And then over time, that switched to wiring money out, because that's what works for me now. So this is a record of all the money I've wired out so far this year, starting in January, and you can see it got bigger. I use this to fund the small lot class, the small lot account, and then it gradually got bigger. I took a bigger chunk out. It was a pretty good week, and it grows. Sometimes it doesn't grow, but then I switched to an auto wire. I'm like, you know what? I'm just going to do 25,000 a week, and then I switched that to 62,000 a week, and then today, actually, I wired out $750,000 because my account exploded. I'm like, oh my God. And I don't want to give it back. So I've wired out $1.9 million. So what do you do with this, right? So, well, first of all, I put it into tangible assets. So I put it into land. This is, we got, this is where we live, and it's great. You got hills, you got ponds, and the only thing we don't have is internet, but we're close. I like, yeah, we do it. And then, so basically it's real estate, animals, family, charity, gold, and taxes. And we got some bison, some wildebeest, some zebras. But the whole point of all this is that this turns us into a job. Okay. You got to take some money away from the markets, or they can take it back. Have you ever been in a situation where you lose money? It's like, man, I could have bought a zebra with that. So that's what I like to do, is just at least turn it into something tangible. All right. So again, that's just my philosophy of trading. It works for me. Now, I know I'm going to talk about Tesla. I don't just trade Tesla, and I don't make money on everything I trade. All right. So, but the idea, of course, is that the winners exceed the losers over time. Okay. So real quick, I'm only going to spend 2 slides on 2008 because I think it's important to put what happened in 2008 into context with what's happening now. So in 2008, it began with the housing bubble, which topped out in 2007 with those no income verification loans. And by mid 2008, the realization hit, and property values and other assets tanked as what? Liquidity evaporated. This is important to understand. We'll come back to this. Hint, no liquidity in the form of debt, all asset prices fall. Okay, I'm going to say that again. If there's no liquidity in the form of readily available debt, all asset prices fall. If you think about what's happening right now, we've got more liquidity than we've ever had on the history, the known history of Earth. Okay. In 2008, as wealth evaporated and confidence fell, economic growth came to a halt, which started to lead to job layoffs. Layoffs continued well into 2009. Greenspan, as a scholar of the Great Depression, I believe that September and October 2008 was the worst financial crisis in global history, including the Great Depression. Of the 13 most important financial institutions, 12 were within 1 to 2 weeks of failure. Okay, I remember all that. I was, living all that. I was buying gold, I was buying silver, I was preparing for the end of times. And here came the Fed. So, now it's a good question. Isn't that a sign of hyperinflation? The biggest issue with hyperinflation right now is there is so much debt drag counteracting hyperinflation. So that may be a problem. That is a problem sometimes, and we've seen that obviously in Venezuela and other places like that. But in the developed world, there's so much debt. The bigger danger is actually deflation. Anyway, that's a whole nother thing. But so the Fed and Treasury, they poured all this money in. It took a couple years for everything to recover. If you don't understand what happened in 2008, the movie The Big Short is amazingly well done, and it explains it really well. So what I learned during this is that during this time, I really thought it was the end of times. I had gold and silver piled up all over the place, and I was ready for the end. And September and October 2008 came and went, and the Fed stepped in, and it was a disaster. And I remember going to Walmart, and it was packed, and people were buying toilet paper. And guess what? They were buying it with fiat fake money. Walmart didn't take gold coins. And I kind of realized, it's like, okay, well, while this is a good store of wealth, life does go on. And so it was a good lesson for me just to not to get too tunnel vision, on stuff like that. So what about what's going on right now? So in March, as the world went into lockdown and the stock market cratered, the world paused, and many categories of spending also paused. Now, I don't know about you guys. I have stopped eating out at restaurants. Don't fly anymore. I don't go to movie theaters. There's a lot of money I used to spend that I don't spend anymore. Okay. I know a lot of people in a similar situation. So there are industries out there that are hurting. And a lot of businesses out there, especially restaurants and things like that in the travel industry, they pay today's bills with yesterday's cash flow. So the government knows this, and they are trying to keep money flowing. They're basically replacing income. Okay, they're giving money to businesses. They're giving money to consumers to replace that lost income so people will keep spending. All right. So the slowdown, some people have called it the worst since the Great Depression in the 1930s. What they have not counted on is, and they're not sure yet, is how far the Fed will go to keep things propped up. I'm not saying it's smart. I'm just saying that that's what they're doing, and we don't want to fight it. Okay. So the question that comes up is, well, gosh, it doesn't feel like a recession. Have you seen the NASDAQ? Many companies are doing well. The Fed is throwing money at this. And yes, the Fed is throwing money at this, and here is the reason why. And let's dig it a little deeper and understand what's coming down the pipeline. Okay? So I've seen actually this question a couple of times already in the chat, and I've gotten this email to me, and it's like, John, with the 10-day simple moving average of the total put-call ratio below 0.8, the VIX touching its lower Bollinger Band, and the skew over 135, and a constant stream of bad news, why does the staff at Simpler Trading remain so bullish? Like, people get mad because we're bullish. Why? Because the market is going up, right? The way you make money in trading is you play the emotions, you don't play the logic. At some point, will the party end? Yes. Will there be signals? Yes. You know, there's definitely things that we look for like that, but they're not happening right now. So hint, if you are trying to trade this market logically, you will suffer because it won't work. This is an emotion-based market, and you have to know how to trade other people's emotions, not logic. The time for logic will come back, but it's not now. There's actually some logic trades out there that I'll share with you, but not a lot. So the key with this, if you're interested in making money in an environment like this, is you don't have to understand why something is happening, okay? But you do have to make a concentrated effort to simply let go of what's not working. And the reason I keep that trading journal is so I can see every week what is not working. Okay, notice I said not what I'm doing wrong. It's not about doing the wrong thing or the right thing. It's about identifying objectively what's not working and getting rid of it. Okay, it's a good habit throughout your entire life. If you got a relationship that's not working, you've got a car that's not working, you've got, get rid of it. There's other things out there, right, that actually might work. So identify what's not working. Don't, forget about the shame and the blame. And I know a lot of times if you've been trading for a while, sometimes you might be carrying big losses, and that's a huge weight to carry with you. And I promise you, forgive yourself and let that go. All you got to give yourself a clean slate. Consider that research and development. You know what can happen. You're far ahead of all the newer traders out there. All right. Start with a clean slate. I've had to do that many, many times. I've got a habit now where I kind of forgive myself about 3 times a week. So it's one of those things that you have to do, or the weight becomes too much to bear. And when you're bearing that much weight, it becomes hard to trade. So my mission is to help people recognize this. When I traded in 1999, I caught moves, but I really didn't know what was happening. But this time around, I know what's happening, and I want everyone to max out the opportunity. So, and I love this because I get a lot of emails I get from people who are like, well, did you see the news? And did you see this article? And did you see social media? And here's the biggest thing I can tell you is that, and just like that, little Susie cured the worst virus of all. Turn that crap off. It is not helping you to make money. Yes, it can keep you fearful. Yes, it can keep you angry. Yes, it can keep you staring at the screen so you'll watch the commercials, but it's not going to help you make money. Okay, that's all I care about, is the freedom that comes from being able to create an income stream from the market. So you don't have to be tied to a job. You don't have to be tied to a boss, whatever it is that you want to do in life. But get rid of the boob tube and stop watching that crap and free your mind so you can actually focus on something that will actually make a difference in your life. So let's understand what's going on here. So this is the bad news that you hear on TV, and this is true news, and we're going to talk about how to play this. So there's a huge drop in retail traffic, okay? In the United States, it's down 52%. In Mexico, it's down 80%. In China, it's down 30%. Retail brick and mortar shops are suffering, okay? Commercial buildings are suffering. Rent on Lower Fifth Avenue, the best place on the planet to have a storefront, has dropped 30% asking price since February. All right. People are fleeing in terms of stores. Now what's coming up right now is, what about the $600 a week jobless aid that nears an end? There are real families and real people out there that are depending on this. What happens if they cut that off? Is that a concern? Yes, it's a concern. Okay. But it's not a concern to Tesla. It's not a concern to some industries that are out there, okay? And it's important to understand that. Is it a concern for these families? Yes, it sucks. Is it a concern for brick and mortar retail? Yes. And so I don't know exactly what's going to happen here, if this is going to pass again or get extended. It's obviously something I'm watching, but I can tell you that the Fed is going to do whatever they can to kind of keep things going and kick the can down the road. So I would believe that they would come up with something, but don't get of the mindset that, oh, if they don't do this, the market's going to crater. Okay. That's not that's not how this is working right now. Okay. So although some areas are doing well, we can clearly see that service industries, restaurants, travel related industries. Commercial, real estate, and brick and mortar are not doing well. Okay. In fact, there is a looming bankruptcy crisis the Fed is trying to stave off by keeping cash flow flowing so people can pay their rent. All right. So people can buy, they can basically pay rent um, and buy goods. Okay. In addition, the Fed is backstopping a lot of corporate debt as many companies are carrying record debt loads. They're buying the ETFs, LQD, etc. Those are essentially keeping the spigot flowing for corporate debt. Okay. What does this mean? This means that instead of credit collapsing, the equity drifts down close to zero first. Okay, think of AT&T. AT&T has a $150 billion in debt. The Fed is not going to let them default. However, the banks are preparing for defaults happening all over the place. In fact, at this point, it is now on par with what they did in 2008, and it's still growing. Okay, they are expecting a lot of defaults. So what does this mean? This means that there are two new asset classes. So the theme is no debt is the new safe haven. This is a chart of AT&T. Okay, AT&T is hosed. This stock is going down. If it moved faster, I would short it. But this is why it's a tale of two markets. Any asset class out there that is burdened with debt, from commercial real estate to AT&T to Ford to General Electric to a lot of the companies out there burdened with debt, they are going to go down. So if you want to short something, that's what you short. But companies without debt, or industries without debt, or assets without debt is the new safe haven. Okay, believe it or not, Amazon is viewed as a safe haven. Why? It's not burdened by debt, and it's also benefiting from the current situation, which we'll talk about more. Okay, this is why also that the Qs, which is mostly technology, have taken out the highs and exploded while the S&Ps are struggling. Yes, they're kicking and screaming, and yes, they're going to benefit from the Apples and the Microsofts because they're part of the S&P 500 too, but a lot of the S&P 500 is weighed down. Okay, it's weighed down by a monstrous amount of debt. So financially, how do we stay safe? So one thing that is happening right now is that inflation continues to recover from the March lows. Inflation is good for business, while deflation is the enemy. As long as inflation expectations continue to recover and jobless claims continue to improve, the economy is going to recover. Okay, that's what's driving a lot of the rally right now, even with pockets of it suffering. So the question is, what's an easy way to check if inflation is rising or falling? Well, one thing to look at here, and this is an easy way to do it, is there's an ETF called TIP, and that's the inflation. It's the inflation essentially adjusted for inflation bonds. Okay. And okay, now that's that one. TLT is more of a representation of the bond market and yields. And then here's the Qs. All right. So look what happened here. As inflation is going higher, okay, the market benefits. Okay. Notice here that TLT was falling, right? Now, when everything hit the fan, TLT exploded higher, but TIP, which is inflation tracked, plunged. Okay. Once this recovered, the market recovered. And you can see here that we're now at new highs here and climbing. As long as this is going up, the market's going to go up. Okay. So that's something to keep in mind, that's what the economy, that's what the markets think is important. Are we experiencing reflation or are we experiencing deflation? Okay, this is a huge part of what's going on in this current market. So if you want to get a sense of that this market's going to be over, keep an eye on this, because if it starts to dip, that's a legitimate sell signal. Okay. Also, money is chasing industries with no debt that will benefit from rising inflation expectations. All right, I'm going to say this again. Money is chasing industries with no debt that will benefit from rising inflation expectations. Period. GE, Ford, AT&T, any companies with a lot of debt are dead money. Okay, if you own them, I would encourage you to reallocate that capital elsewhere. here's another important theme. Technology changes that were going to happen over the next decade, okay, i.e. work from anywhere, demise of brick and mortar, have all been hyper compressed into what is happening right now, okay? Companies that benefit from this new normal are exploding in value, and people are buying the future and shunning the debt-ridden past, all right? So it is a tale of two economies, okay? It's a tale of two economies. People are buying the future, and they are shunning the debt-ridden past. Okay, so what are some other areas of no debt? Precious metals. There's a reason that gold is exploding right now. It's a debt-free asset. I do think that gold is going to take out 2,000 and finally go up to that $5,000 level. I've always laughed when people are like, oh my God, gold's going to 5,000 or 10,000. This is the first time where I'm like, yeah, I think it is. And silver is, for the first time in a long time, verifying this, okay, confirming it. Gold did not take off until silver started. Now, silver does not lead gold, but once silver is going, it's a huge tell that gold is about to take off, okay? Big stuff. The other thing here is Bitcoin. It's a debt-free asset, okay? For those of you that trade it, this is Bitcoin futures, but you could also, if you understand crypto, this is another place, a safe haven of debt-free assets that will move higher in this environment. And in fact, as I'm looking at this, I see this big old daily squeeze. We've got the early warning, and it looks like it is about to go. Most likely going to follow gold and silver. All right, so we talked about in the video, what am I buying for my kids' Roth IRAs right now? Well, I'm putting them into silver leaps. So the June 2022 leaps, the $20 ones are $4.80. Now, you could go to the $35 ones for $1.99, but I mean, that's for you're saving $3 for $35 of strike prices. So if someone said, hey, I got this cool stock that's only $4.80, would you buy it? Yes. I look at that as buying a stock for $4.80. So I'm putting that one in there. And at the same time, I'm going to GLD, which is going to be higher priced, but also you got the at the money 170s that are about $20, and then the $200 ones are about $11. Now, you can go to January 2022, which is about less 6 months, and there's a lot more liquidity, there's a lot more volume if you are looking for that. All right, so those are the main ones that I am looking at there. Okay, now the thing about this current market, now let's get into trading. The good news is you do not need to take huge risks, okay? I've showed you a couple of my bigger trades, and we're going to dissect them, but you don't need to take huge risks. You just need to be able to recognize the new normal opportunities, all right? And I love this thing here. It says, hey, buy stocks. No, you first. So this type of environment creates a number of issues. First, option premiums are insane, and the spreads are wide, okay? And actually, I want to jump right into, yeah, there we go. So the first thing is you do have to reset, okay? The main thing about this market is that what used to be a 3-week move off of a daily signal or a 3-month move off of a weekly signal, those don't exist anymore. There are no daily signals, okay? There are no weekly signals. So it's now a 2-day move off of a 30-minute signal. This is huge and very important to understand. You have to reduce position size to survive in this market, okay? You have to cut losers faster, and then you get out of winners into volume momentum, meaning you don't have a little price target. You look for these volume explosions and you sell into that, okay? As a trader, I want you to think of yourselves as Walmart. What Walmart does is they anticipate demand. They see Memorial Day is coming up in 3 weeks, and they know people are going to want to get hot dogs, so they stock up on them now at 50 cents. Let's buy all the hot dogs we can from Oklahoma for 50 cents. And then on Memorial Day, people will pay $3 for them, and what they're doing is they're anticipating demand. Okay, and we're going to talk about a setup that anticipates demand. What you don't want to do is be the guy buying the hot dogs on Memorial Day. You want to be Walmart buying them for 50 cents, selling them to the guy who's panicking and buying them at the last minute. And if you get that mentality, what's going to do is it's going to set the stage for a setup that's actually going to work for you consistently versus chasing the stock of the day. Okay. One of the most common things I'll say in the room today is, well, John, what about the stock? I'm like, it looks great. I wish I was in it. It's gone. Okay. So we got to find out, how do we get into these? How do we identify these? In addition, it is critical to take care of your mental health. Okay. I know what I have found in this environment that helps me, of course, is sleeping 8 hours. I don't do alcohol, and I exercise. And all of this stuff helps me clear my brain. For alcohol, it basically takes about 10 days to get it out of your system. You get that craving. Okay. And I'm not against alcohol. I'm just saying it doesn't help, because whatever pain and suffering you feel in the markets, if you think you can take it away with alcohol, it's going to dull your brain the next day, and it's going to make it hard to trade. If you can go without it for 10 days, you won't need it again. It clears your system, and then you exercise to relieve stress. So that's what I do. I've also found that flat is the new spa treatment, meaning that give yourself the gift of going flat on the weekends. You don't need to be worrying about the stock market. I am almost flat almost every weekend, and it's a vacation. Next, stop thinking logically. Things like, this is really expensive here and it can't go up anymore, I should short it. Okay, we are not in a logical market. Markets move because they have to, not because they want to. In 2008, Disney got as low as $15 because of margin calls. Forced selling begets more forced selling. We are seeing the opposite of that now, as Tesla and other shorts get blown out of the water. Okay. Focus on the price action and specific signals. All right. So let's dive in and look at examples that are working now. All right. So I'm going to show you this real quick. One of the things I really like is something called a squeeze. So I want to show you a couple squeezes. So a squeeze, these black dots, is simply a compression of the Bollinger Bands. And when the Bollinger Bands compress to a certain point, we call it a squeeze. All right. When we see a squeeze, then what we look for is a release of volatility. And then we're looking, is it going to be an upward signal or a downward signal? But what I want to point out here is that without a squeeze, it's blah, 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 choppity, chop, chop, chop. Okay. Avoid this crap. With a squeeze, boom. All right. Now, this is the Qs, bought 2,000 shares. It was good for $13,000. Now, obviously, with options, futures, you can use leverage. Okay. The same trade on the NASDAQ, and the NASDAQ here went up like 300 points in 30 minutes. It was good for $122,000. Okay. So my main point here is that if there is not a compression of volatility, you should not be in the market, because you're going to get chopped up and you do not have an edge. And then an individual stock. So this is a 5-minute compression of volatility on Google. And again, good for a good move on Google. So this setup to me is simple enough that I've also shown my now 10-year-old how to trade it. So about once a week, he'll sit down with me. We'll go through the charts. He'll pick one. And his goal is to typically make a couple $100 a week so he can buy Roblox for his Roblox account, which he likes to program stuff in there. And so it's fun. Obviously, I like teaching him how to do it. Okay, so what are some signals that are working right now? So this is exactly what I do. So I already told you, you got to throw out the daily and weekly charts. They will not help you here, and I'll talk about why in a second. Here's what I do. I looked at stacked EMAs. EMA stands for exponential moving average. Okay, I've got the 8, I got the 21, 34, 55, and 89. And when I say they're stacked, that means that the 8 is on top of the 21, which is on top of the 34, which is on top of the 55, which is on top of the 89. When you have the situation and you get a squeeze, there's an 85% chance that the volatility is going to be released to the upside. And that's it. So here's the NASDAQ 2-hour chart, not a daily chart. I'm doing nothing here, nothing here. I don't care. I don't care. Squeeze. Yay. 21 period moving average. That's my entry. Okay. Squeeze plus 21. Otherwise, I don't care. I don't want it. Squeeze plus 21. And then last, I want a buy signal. So this is our ready, aim, fire tool. you get the buy signal, you got the squeeze, 21, and that's it. That's all I'm looking for. Oh, look, here's another one. Squeeze, 21, and a buy signal. Oh my gosh, a squeeze, the 21, and a buy signal. Boom, boom, boom. Okay, and that's it. And this one was good. It was a $38,000 trade, getting in, getting out, and that's it. And this was just the last one here. So that's the kind of stuff I look for. It doesn't have to make sense. It doesn't have to be logical. Okay. Now, here's the thing about Tesla, and this is, I've had more people miss good trades because they're looking at the daily charts. Stop looking at the daily charts. Okay. So on Tesla has been extended and overbought ever since it crossed $1,000. If you look at this on a daily chart, there's no way you're going to buy it. There's no way. Oh my God, it's so high. Okay. That is the absolute worst way to look at this market. Okay. Daily charts are for slow markets. We don't have a slow market right now. We have a fast market. Okay. So my main chart is the 30-minute chart. The 30-minute chart now has moves that were the equivalent of daily and weekly charts. Yes, I'm going to look at the daily to make sure it's in an uptrend. Okay. I'm not going to buy AT&T. That's not an uptrend. But then here we go again. Squeeze. We're here at the mean and buy signal. Okay. Great. I'm in. Oh my God. How fun was that? So that's the kind of stuff that can happen. You don't know how high it's going to go. All you know is that the signal works, right? So this was $1 million trade. So this was, I had bought calls, I had sold put credit spreads, and by the end of the day there, and I kept this call debit spread overnight, and it was like, it was really surreal. But when you're having stocks that are moving up $100 and you have a signal that you recognize and you get into it, that's what's possible. Now, don't get discouraged if you're trading a small account, because I want to keep in mind that it's just dollars. Okay. You got to think in terms of percent. On this day, my account went from 3.4 million to like 4.5 million. Okay. That's a good percent move. Whatever that is, 20% or 25%. So that's what I mean, is that's the kind of stuff that can happen in this kind of a market. Now, here's another thing I'm going to show you that a lot of people miss, okay, because there's no signal, and it's the gap and go. And I love the gap and go. And this is one of the ones that drives people, I think, crazy. They're like, why would you buy this up here? So here's an example of another Tesla trade, the gap and go. So you'll notice here, I'm on a 30-minute chart. There's no squeeze. There's no signal. We gap up and we pause and we go. Okay, that's what I mean. So what is the signal for this? When there's a big gap up like this, all right, when there's a big gap up like this, and I then and only then drill down to the 2-minute chart. Okay, on the 2-minute chart, there are two time frames between 9:30 and 10:30 Central, and then 1:30 to 3 p.m. Central. During those times, if you get a 2-minute squeeze, you follow the same process. Boom. Okay. Boom. Now, the middle, you avoid like the plague. Okay. You wear a mask if you're into wearing masks. Do not take any 2-minute squeezes in the middle of the day. That is a great way to churn your account and get distracted, and then you miss out on where it works. Okay. The action happens after the 9:30 to 10:30 or 1:30 on. Now, bonus. If you catch one after 1:30 and it closes at its highs, okay, and this is typically what I do is I just hold it to the close. I get out a half and I hold half overnight, because in this situation, the odds are pretty high that you're going to get a gap up the next day, and you don't screw around. Okay. Don't look the gift horse in the mouth. When you gap up the next day, you just get out. That's it. So this is one of my favorite. So when there are big gaps like that, I love that, because then I can drop down to this and look at my windows and be good to go. Okay. So Tesla. Yes. So this was the gap and go. This was off of a 2-minute squeeze. Okay, I bought 100 shares of stock at $13.59. Sometimes I like to buy the stock just to track where I got in. I had bought 100 calls. I sold half. So I got my P&L on the day and P&L open. And then I sold some put credit spreads. So I kept all these overnight. The put credit spreads are nice because they're kind of low stress compared to directional. So here's the other thing, because I know directional trades are stressful. And I want to point out that, yes, $1 million directional trade is great, but it is stressful. However, a $200,000 put credit spread is what I consider less stressful income. So on this particular trade, I had a 100 lot, $50 wide put credit spread on Tesla that I sold for $20.65. Here it is at 43 cents, made over $200,000 on it. And it was the least stressful $200,000 I've ever made in my life. All right. So if you do get freaked out by directional stuff, consider that this is a market where you can also make a lot of money selling put credit spreads using those same exact signals. Okay. So how to trade all this? So ideally, I don't like to have more than about 5 to 7 positions on. Right now in this market, honestly, I prefer about 2. Okay. Sometimes I'll put on hedges, but I need to get a signal. I typically will hold some overnight, scaling out as it goes in my favor, but I also cut bait fast if it's not working. Okay. My attitude towards a trade is it's either working for me or it's working against me. If you own a car wash and you've got 10 employees and 2 are in the corner smoking weed, not doing their jobs, do you give them a raise and more responsibility, or do you fire them? Well, the way a lot of traders treat their losing positions is they give them more care, love, and attention than they do their winners. Get rid of them. And let go of all the psychological baggage around it. It has nothing to do with it. Your job as a trader is to cut the losers out. It takes up not only real capital, but it takes up psychological capital too. And when you're taking up psychological capital, you're going to miss the good trades. So I will generally allocate 5% to 10% of my portfolio to one position. If it's all systems go, I will add to it, sometimes building up a 20% position. This means that most of the time, if I've got it, say, a 100K account, I might have 20K invested in options and 80K cash. You do not need to be maxed out to make money in this market. And if you are maxed out, it's probably going to be too stressful. Most of the trades I do, my max risk is 5%, meaning that I'll buy calls, and if it goes down 5% against me, and by the way, when I say max risk, I mean max risk. I'm typically out way before that. But I just like to plan in case there's a disaster. What happens if it gaps down 200 points, right? So my trading on in March, when things were, going pretty nasty, I was certainly more focused on, I had a lot of puts on like the spiders, the Qs, the S&Ps, but I was also looking at stocks doing their own thing like TDOC. So in March, when things are a little bit more volatile, I do like to mix it up a little bit, certainly with some shorts in there as well. But a big question I get right now is, well, what happens if it goes back to that again? Won't you get killed if you're just buying the dip? Well, guess what? When the VIX goes over 40, you change. You stop buying the dip, okay? At that point, I actually stop wasting time looking at stock charts and I just look at the indexes. Why? Because if the indexes are cratering, guess what? Most of the stocks are going down too. Down markets are actually easier to trade once you simplify like that. So when the market starts going down again, I'm going to look at the spiders and the ES futures and SPX and then the Qs, and that's it. You can have plenty of opportunities just following those. And when you get a really fast market, all you do is simply short the rallies back to the 5 and the 8 EMAs until it stops working, okay? And then the signal is we look for closes below the 21. You close below the 21, short the rally, short the rally, short the rally, short the rally until it stops working, and that's it. Bear markets don't have to be hard. The main thing is you don't want to chase. Okay, so let's look at, again, just kind of a wrap up. That's kind of the chart layout that I like to look at. So if all this is new to you, for better or worse, I have lived through multiple market crashes and recessions, as well as bubbles, economic expansion. I have seen what these various markets can do. I understand them. It doesn't mean I know what's going to happen next. I just understand the possibilities. When I started out, I made every mistake in the book. My mission in life is to prevent as many people as possible from making the same mistakes. Someone asked me once, it's like, who what do you like to do? And I said, I actually, and I know this sounds goofy, but it's like, I like spending time with friends and family, and I like to ease people's suffering. I don't know why. I guess, it's like you take your own experiences as a kid or whatever it was and say, wow, people shouldn't have to feel like that. And I transmuted that into trading. And I know all the pain and suffering that happens with the trader because I have lived it. So there's ways out of that. And that's what I like to show people. So I do that by showing you the way by what I've learned. Okay. And I want to be very clear. It doesn't mean that every trade I take wins. It just means that over the course of 100 trades, I make money. I cut the losers fast. I recognize opportunities. I shift gears because I've seen these movies before. Okay. And I honestly don't know when we're going to see markets like this again. This reminds me of 1999. We're seeing stocks going up $100, $200 at a time. You can buy one option and a stock goes up $100, and that's real money versus a stock going up, 20 cents a day. And when it ends and crashes again, guess what? I love crashed markets. Those are my favorite. Okay. We don't have any signals for that at the moment, but I'm certainly keeping an eye for it. Okay. This is the kind of market where, last year I didn't have the opportunity to make $5 million. Next year, I may not happen again. I mean, I'll do the best that I can, but this is a special kind of market and you want to be able to maximize it. So there's some weird stuff going on right now. And although it seems scary, it does not have to be. You can be confused. Okay. And I told this to my mom the other day, and I think I confused and upset her. It's like, Mom, you can be confused and upset, or you can make money. And that made her confused and upset. But anyway, we call out trades and market commentary in our own trading room, and we post what we are hearing from funds and other people in the industry so we know how to protect ourselves. We know when to be conservative and when to go for the kill. Okay. Hopefully, if you have found tonight's information pretty useful. I always like to make sure people have got specific action items that they can do the next trading day. I don't want anybody in here to be able to look back in 5 years and say, wow, 2020 was my shot to really make some cash trading, and I didn't take advantage of it. All right. So if you are interested in our trading room where we are talking about this all day long and sending out signals, we do have we very rarely open this up as a membership special with quarterly and annual subscriptions. But if you go to simplertrading.com/community, you will come up with a page and you can just give us a try. The monthly is just $197. And during the day, not only are we sharing, there's a bunch of us, we're all sharing our trading screens, but we also have iOS and Android apps that send push notifications of the specific trades we are doing. Okay. So you don't have to be in front of your computer. A lot of our clients will be at work. And of course, a lot of people now are working at home. It's like, oh my gosh, John's buying Tesla right here. I guess I will buy some too. If you want to follow along. And it's just kind of a learning opportunity. So with the monthly subscription, you do get access to our real money. And what I mean by real money is we're not trading demo accounts, live trading room, instant mobile alerts sent to your phone, daily actionable market insights. Okay, we have video recaps and things like that. We got an A-list team with, hundreds of years of experience. Bruce, he traded a $200 million hedge fund for 20 years. We've got Henry, who's learned how to do my stuff better than me and has added on to it. Danielle brings her perspective of bringing into his income. Allison came in and started showing me things that I didn't even know you could do with SPX options. We got an Elliott wave expert in David. We've got, the list goes on and on. I'm leaving people out, but it's such an amazing team. And what will happen is a lot of times people will read my book and say, oh, I want to do what John's doing. And then go geez, John, that might be too aggressive for me. Let me see what Henry's doing, or let me see what Bruce is doing, or let me see, what somebody else is doing. And so we've got a whole community here that can help you meet your trading goals. And then if you want to do quarterly, what happens, you also get our trading psychology and money management course recordings. And then if you want to do annual, you get all that, and there's a slight discount to doing an annual versus quarterly. Okay. So that's what we got. Just some people that have been in the room, just to let you guys know that this is possible. Sometimes if you're newer to trading or you've really filled down the dumps or just hasn't worked, it's like, hey, thanks for the Tesla trade that pays for my room cost for the year. Great day, up 12% of my account thanks to Netflix and Tesla. Going to start hedging when Netflix hits, hits Carolyn 557 level. I turned 5K into 31K in 1 month. Thank you. Best ever day today. In Tesla at 2150, out at 3650 on the options. Great call. So again, not all the trades work, but over time, they have proven to work. And I just think it's important because you can have guides that actually, they know what they're doing. We know what we're doing. We know how to change gears. We know how to recognize what's going on. So for the monthly for 197, the main thing here, and the reason this is different, is we are actually just trading our own money. We're not doing hypotheticals. We're not, anything like that. During the day, you can log in and watch our screens. We have an ongoing chat. You can talk with other members as long as you're polite. If you're not polite, we will mute you. You can criticize us, but don't, be nice. We got a lot of different memberships for futures, for options and stuff like that too. But really the main thing here is real-time alerts. And I have found that this has been a real plus. And I like this too, because I like to say like, oh, wow, look at Henry just did this trade, or, if I'm not in front of the computer. So that's really cool. And for the quarterly, what happens is with quarterly, you do get a trading psychology and money management course as well. Okay. And essentially what that talks about is some psychological tools that I've learned over the years to get a consistent edge in the markets. And that's obviously super important right now. So the idea here is to keep calm and profit, even on days when it just isn't working. You'll also see how Danielle overcame the critical psychological aspect of trading, or as she likes to call it, how she trained her trade monster. And Danielle came in, it was great because she came in super smart and just studied everyone's style and then just cherry picked everything that she liked and turned it into her own style. So I thought that was really cool. And then the annual, which is $19.70 a year, or VIP, the main thing there is you do get all that, but you do get a little bit of cost savings. So if you're like, you know what, this sounds amazing, I'm going to do the annual, there you go. All right, so happy to stick around and answer questions. Again, the link is simplertrading.com/community. And, again, we'll be in the room tomorrow. I've got this is my Tesla earnings trade that I'm doing, where I'm basically made a bet that Tesla would do nothing. So I sold calls that I expect to expire worthless. I don't know what happened to Microsoft. And Microsoft, we'll see. I sold a put credit spread, so it really needs to rally $3 for that to work. And then I bought some stock after hours. But and then the other one we did was Snapchat for earnings. So right now it's a little quiet, and waiting to see if that one is gonna pan out as well. And then my favorite days to do directional trades are Tuesday, Wednesday, and Thursday. Monday and Friday, this Monday was actually pretty special. But usually Tuesday, Wednesday, and Thursday are the days when I'm most active. That's awesome, Matt. Mash is saying my decision to join your group, and now it just ran off the screen. But no, thank you. Is one of the best investment I've ever made in my life. Yeah, well, I think that's great. I mean, part of what's driving this is that when I worked in corporate America, I was so desperate to escape corporate America, and I was on my own, placing trades, on the phone, doing option trades on the phone. But I didn't know what I was doing really, and how amazing it would have been to have a community of traders sending me alerts, telling me what's going on. Oh my God, it would have made my life so much easier. So part of the reason we've done this is to create a community for traders, because trading is lonely. You're typically doing it by yourself, and nobody in your life understands. When you get the trading bug, okay, it can become an obsession. Nobody gets it but you. You can't talk to anybody about it because they don't understand it. And in fact, I don't even tell people I trade. If I'm at a cocktail party or, meeting a group of people that I'm not, like the neighborhood or something like that, what do you do? I'm an accountant. Anything just to switch the conversation to somebody else. I don't want to talk about, I do not enjoy talking about trading with non-traders. It's like, stick a fork under my toenail and push really, really hard would be better. So I do love talking about trading though with people who are trying to become traders. And the great thing in our room is we have, it's almost like this huge AI, because we got traders in there that spot specific opportunities. I'm always paying attention to some people and they're like, John, did you see shop? I'm like, oh my God, what? And I'll go over there and it's like, oh, this guy's always right on shop. And this gal's always, right on Microsoft. And so I pay attention to that too, because you can't, as one person, you can't watch everything. So it's really a great group. A tool, that's a good point. It is RI. I like that. Real intelligence. Yeah, Gabe, good question. So you're not concerned about the skew and the VIX? Yes, I am. And I'm watching the markets every day. And at some point, they will give a signal. But I'm a real big believer in, you see, like, say, the put call ratio and the skew that's giving you warning signs, then you need the signal. So I've done like some cheap, what I call cheap bearish butterflies that don't cost a lot of money. I mean, hedges just aren't working. But at some point, we'll get sell signals like we did in March, and then we'll play them. But the important thing is to match that with a technical signal. And remember, a technical signal is simply a charting of emotions, because what we're trading is emotions. We're not trading logic. Yeah, so good question. What would be max risk for a 5K account? So I actually do. So I have we do a small account as well, and I typically will do 5 to 10% in that as well. Oftentimes a little bit more. So actually, we did do a 15% position in Tesla in a 10K account. So we put 1,500 bucks into it. So with a small account, it's similar risk. It ups it a little bit, but it's a similar idea. Where are the questions John's answering? So I can see. So I see. There's a lot of questions. I know you. I think the way we've got this set up is it's called webinar only mode, so we can see the questions, but you guys can't see each other's questions. And the reason we do that is so we can actually see the questions. Otherwise, everybody's talking and we miss everything. No, I do think we're going to get a puke, but I don't think it's going to happen yet. Maybe as we get closer to the election. Will you do another small account group soon? Yeah, we've got and we do have a small account. We'll probably, if you're interested in that, we can send you an email on it. But we do have a service that does focus on 10K accounts. Did you buy a Tesla? I haven't yet. I want to get the truck. And the only reason I don't have a Tesla is because we have a dirt road at our place, and the dirt roads destroy car tires like that. Yeah, the truck looks pretty fun. Mm-hmm. In trading, do we follow everyone at Simpler Trading or just one or two? Boy, that's the $64,000 question. You follow the ones that are going to be right. just that's a joke. What you do though is I suggest you learn everybody's styles. There's some days where yeah, I'm going to get stopped out of my trades, and like Henry will stay in them because he has more patience than I do, and then all the trades hit his target 3 days later. Okay, or I'm in a directional call and I can't take the heat anymore because I cut my losers fast. But Danielle's sitting on a butterfly and she's like, "Gosh, JC, why are you sweating?" And it hits her target. So there's different trading styles that will fit your personality better. Yeah, no, for Tesla, I mean, we'll see where it opens. I mean, I'll send out alerts on Tesla tomorrow. I mean, basically we're making a bet that it wouldn't have a huge move. So knock on wood, we'll see where it is tomorrow. Now, the 30-minute for high compression is good. The tricky thing is like when you get a stock like a Shopify, like those gap and goes. So running scans on like a 2-minute chart is worthless because you're going to get so many of them, right? But if you see a list of like, wow, these 6 stocks gapped up, you might just search those. But the 30-minute and the 2-hour, those two are really good. How to keep track of the different trading styles by each moderator? You know what? That's a good question. Danielle wrote a chapter in my book about how she essentially utilizes each of the moderators. So this is what I do with Raghee, and this is what I learned from Raghee, and this is what I learned from Henry, and this is what I learned from Bruce, and this is what I learned from Carolyn. And and she did a really good job kind of breaking that down. Bum, bum, bum. Yeah. So Ed, good question. So do you turn off extended hours? And the answer is absolutely yes. I do not. If you want accurate signals, okay. So like here's Microsoft. So Microsoft, I've got extended hours on because I want to see what happens after hours with earnings. But on a normal signal, if I'm looking at squeezes and stuff, here, let me look at this. Oops. I don't want that. So if I'm going to look at a squeeze here, what I want to do is make sure that the uh, is off. Okay, so for stocks, does that make sense? So for signals, I don't want the aftermarket and the pre-market because a lot of times it's noise. The real volume comes in once the market opens. The levels, good question. So the levels pre-market matter, but and so I will. So if I'm trading Tesla, right? So let's say I've got Tesla and I'm watching it. I'm going to see where it is pre-market and notice where the high is. These green lines I just put every $25 because I couldn't keep track of where Tesla was moving so fast. So I do look at the pre-market levels. Good question, but I don't take pre-market into account when setting up signals. Oh yeah, no, very good. Yeah, so Rafa, we actually had a live event planned in November. We do one live event a year in Austin because it is fun to meet everybody. But this whole, COVID, yada yada yada. So I think we postponed it to spring just to let things settle down. But normally, yeah, we do like one a year. John, do you think AI will be able to do what retail traders do one day? So I have a friend in Austin. He owns an AI based firm. They got a group of 50 traders. They do well, but we trade differently. And that's the best way I can say it is that they just trade differently. They're trading a lot of money, so that's a limitation. They don't trade options. It's not enough liquidity, so they're just trading stocks. So most of these guys doing the AI stuff are trading the stock. One of my favorite things to look for is what I call the algo flush, where algorithms will push a stock down seeking out stops. And it's one of the best buy points. So we keep an eye out for that in the room as well. Oh, Formula One race would be awesome. Yeah. Yeah. So apparently we're getting a gigafactory in Austin. So I know Elon is selling all his houses. So if he needs a place to stay and he likes zebras, we will see what he wants to do. All right, guys. Well, we have spent an hour and 15 minutes together. And I know everybody wants to get back either to watching the markets or anything like that. So yeah, no, I hope you guys enjoyed tonight. Again, my main goal is that you got a couple of action items that you can use. For those of you that have even been with us, hopefully you found a few new things there. And then if you've never heard of us, I encourage you to give us a shot, even if it's just for 30 days. Milk us, learn all you can, and leave if you want, and that's totally fine. We're here to help. If you like the community, stick around, and it's going to be an amazing rest of the year. I mean, we got the election coming up. We got an economy that's going nuts. We've got debt-driven companies like AT&T that are going to get ground into the dust. And there's going to be swings both up and down that we can take advantage of. And we're here to help you with that. So should be fun. All right. All right. All right, guys. Well, thanks for joining us. It's always a pleasure to talk to other traders and for people who are interested in trading. You have a fantastic evening, and I hope to see you in the room, hopefully tomorrow or hopefully at some point. And take care. Good night.